These past couple of weeks have been quite turbulent to say the least, because as luck would have it, my first real experience of the market has coincided with this whole Gamestop debacle. But what exactly has been going on? Well, to put it simply, at the end of January, an enormous army of amateur investors all got together on the Reddit chat room Wall Street Bets and all coordinated to buy shares in Gamestop at the same time. This sent the price soaring from around $45 per share to nearly $480 in the space of a few days. Now that all sounds great, and I guess everybody got rich and lived happily ever after. Well, no, not everybody. The people who took the biggest hit by this madness were the people who were shorting GameStop, i.e. the hedge funds. Now, shorting is just the opposite of buying. So instead of making money when a stock goes up, you make money when the stock goes down. Now, there are these things called hedge funds, which are basically organizations that spend a lot of money betting that a stock is going to go down in value. And the more the stock goes down, the more money the hedge funds make. So when you look at GameStop, it seems like it'd be a pretty safe bet for the hedge funds, because GameStop's primary business model is the selling of physical games to people on the high street, a similar venture to Blockbuster Video. And we all saw what happened to them. So as the hedge funds continued to bet that GameStop's share price would continue to fall, they were blissfully unaware that the Reddit army was looming over the brow of the hill, about to send the price of GameStop through the roof. And that's exactly what happened. As the price soared to new heights, it caused what's called a short squeeze, meaning that the hedge funds, who had shorted millions of dollars in shares, were now losing millions as the price of the shares were going against them, resulting in them having to close their positions before they lost even more money. And what happens when you close a short position? Well, it sends the price even higher, and the Reddit army got rich, and the hedge funds, well, they lost a few bucks. Much to the delight, however, of the Reddit army, who all claimed that they were punishing the hedge funds for trying to profit from other companies' misfortunes. That and a big fuck you to Wall Street over the financial crisis of 2008 and the disappointing lack of retribution thereof. So as the price went to the moon, not only did the short sellers lose millions, but the buyers made millions too. If you had put $10,000 into GameStop at the beginning of the year, you would have made over $100,000 return. Oh, if only. But in all seriousness, a lot of people who made lots of money in the GameStop short squeeze actually ended up losing a lot too, as there was pressure amongst the Reddit investors to hold on to their shares and not to sell them, known colloquially as having diamond hands. Inevitably, more and more people sold their shares and the price plummeted back down to around $50. And so those diamond-handed dudes ended up losing their profits, and some took massive losses. Additionally, in the middle of all of this, the commission-free broker Robinhood, which a lot of the Reddit army were using to buy their GameStop shares, all of a sudden halted the buying of the stock. A controversial move, as they actually continued to allow the stock to be sold. This enraged a lot of traders, inducing panic selling, causing the stock to plummet, and inevitably many people taking a loss. Robinhood received a fair amount of backlash for the move, calling for the CEO Vlad Tenev to resign. And Robinhood defended themselves by claiming that they had no choice but to suspend the trading of GameStop shares due to the unexpected and high clearing costs that Robinhood would be subjected to because of this unexpected volatility. So when certain stocks become extremely volatile, the companies behind the scenes that facilitate the actual transactions and settlements, they charge the broker higher fees to settle the trades. So did Robinhood do the right thing? Did they have a choice? Did the Reddit army spark a revolution? Or did they manipulate the stock market in ways that are detrimental to the way we trade in the future? The Reddit battleground has since moved over to other stocks that have been shorted by the hedge funds. Stocks such as AMC, BlackBerry and American Airlines. And all this has really awakened the unstoppable power of social media and the ease in which people can coordinate en masse incredibly quickly to turn the markets upside down. And this is a huge turning point in the history of the stock market, and many short sellers now will be changing their strategies and will have to adapt their approach to start looking into what's actually going on in these online forums. And some hedge funds are actually now starting to invest in growth stocks as opposed to failing ones. So what does this mean for the future of the stock market? Could we see a new financial trading tax being applied to the purchasing of stocks in order to avoid such a situation happening again? Well, that would be pretty catastrophic to the average retail investor, inevitably reducing trading volume and therefore reducing the returns on your trades, and ultimately leading to a fall in asset prices, triggering an increase in the cost of consumer goods, which is just bad news for everyone. Let's just hope it doesn't come to that. The financial trading tax is something that has been discussed in the US Congress for many years now, and some countries that have actually initiated the tax have since pulled out of it after seeing the devastating consequences it has made to their economy. So let's just hope another solution could be found that works for everybody. And all that was going on while little old me over here was trying to have a go at trading for the very first time. What a time to be alive. So, back to my journey. That whole Gamestop fiasco started a few weeks back, and I've since been paper trading, practicing my newfound day trading strategy, and it's going well. I'm losing plenty of fake money, which is great because at this stage, every loss is a lesson. I'm still studying and educating myself every day, as there will always be something new to learn, or even something I may have learned a few weeks back that I'm only now actually experiencing. So in that case, I'd go back and relearn that thing now that I can actually relate to it. This really isn't a linear process. You will be going back over things time and time again until they're really locked in. So for you guys out there who are just starting out like me, keep going and don't give up. Yes, there's lots to learn, and yes, there is a lot yet to discover, but we'll get there slowly and consistently. So go and practice paper trading with your demo broker account. Do not use any real money until you have a tried and tested strategy and a clear understanding of exactly why you are trading a particular stock. And one other thing I'll say before I go is I don't actually recommend getting involved with meme stocks such as Gamestop or the other Reddit hype stocks unless you really know what you're getting yourself into. These stocks are ridiculously volatile and you could get yourself into a lot of trouble if you don't know what you're doing. I'm most certainly not going to get involved, but it's good to keep an eye on it because all of this is history in the making. Now next week I'll hopefully be sharing some live trades with you and looking into analysing earning reports and why I pick a certain stock to trade. So keep an eye out for that, and if you're enjoying these videos, do me a favour and help me to grow the channel by hitting the like button, and don't forget to subscribe to keep up with me on my trading journey, and let's see where week 6 will take us. Alright, I'll see you next time.